Another week, another opportunity. Hi everyone, welcome to Intelligent Investing. I'm April Tan, Chief Equity Strategist of COL Financial. After a brutal drop the week before, the Philippine market bounced back thanks to fresh foreign inflows, a tariff rollback, and stock-specific catalysts. In today's video, we'll go over Trump's latest move and how it may have helped PGOLD, San Miguel Corporation's stealthy Meralco acquisition and if it's worrisome for the power company's investors, why GTCAP's automotive subsidiary won't lose ground to cheaper American car import, what to expect from the upcoming PSEI rebalancing, SONA, and the Fed meeting. Now, this week's extra special as we have 5 stocks that made moves worth your attention. Let's dive in. The PSEI rallied 1.7% to 6,413.18, recouping much of its prior week's 2.4% loss. Foreign investors turned net buyers, adding 340.2 million pesos worth of stocks versus the prior week's 3.4 billion peso sale. Market breadth turned positive with 130 gainers versus 80 losers. The peso also stabilized at 57.11, helped by a 0.8% drop in the US dollar index. Now, if you remember, a Philippine delegation was sent to the US to negotiate Trump's new export tariffs that would have increased the Philippines' tariff rate from 17% to 20%. The result, on Thursday, President Trump announced a 1 percentage point tariff cut on Philippine exports from 20% to 19% as part of a trade deal. In exchange, the Philippines removed tariffs on US automobiles, wheat, soy, and pharma products. 1% doesn't seem a lot, but in a way also, we didn't give up much to get that additional 1% benefit. We already have American brands that are being sold here like Ford, but did you know that most of those cars are imported from ASEAN anyway? Those Ford or American cars that come in actually come in tax-free because we have free trade agreement with ASEAN. So the only cars that will benefit from the 0% tariffs are the expensive ones. We're not giving up much because they're coming in free anyway. Finally, pharmaceutical products, those come in with tariffs. We talked about how the government is collecting tariffs from them. So in a way, the government will lose revenues. That is true. But then you think about it, you're losing revenues for the benefit of all Filipinos, especially the poor Filipinos that have to buy all these imported medicine at an expensive price. I would say it's a fair deal because, we gave up the tariffs on these products, but in a way, they will benefit the consumers, at least on the pharma side. And for the automobiles, we're not really giving up much. I think fair lang. It's just fair for both. This symbolic win gave investors confidence that trade tensions may ease before the August 1 deadline, especially as more deals get hammered out. Not only that, but this move made one stock gain big and another lose out. PGOLD went up 12.2% with investors betting that its warehouse retail arm, SNR, can now offer lower prices on US imports like meat, cheese, and packaged goods. That's a win for margins and market share. We currently have a buy rating on PGOLD. Meanwhile, GTCAP fell 2.1% on fears that Toyota Motor Philippines, or TMP, its key subsidiary, could lose ground to cheaper American car imports. But this worry seems overblown as Toyota sources most of its vehicles from ASEAN countries, which are already duty-free under the ASEAN Trade in Goods Agreement, or ATIGA. Most US-branded cars sold here are also made in ASEAN and are therefore tariff-free. As such, they won't benefit from the removal of tariffs. The few exceptions, like the Ford Explorer and Jeep Cherokee, are high-end imports that won't gain major market share even with 0% tariffs. Bottom line, TMP's moat looks secure. We currently have a buy rating on GTCAP. Another stock that surprised us was Meralco, dropping 1.9%, not because of fundamentals, but from San Miguel Corporation's surprise acquisition of a 3.8% stake. The most shocking bit, they bought the stock at only 90 pesos per share, a massive 83% discount. The deal stems from a 17-year-old legal dispute with Land Bank. With SMC no longer a strategic player in Meralco, the market fears it may sell these shares later to raise capital for its various infrastructure projects, creating potential overhang. Once upon a time, for 2008, it was the Lopez family who owned Meralco and not Metro Pacific, who is now the major shareholder. So San Miguel at the time was really focused on food and was just beginning its foray into power and infrastructure. So maybe in their minds they were thinking, an easy way to enter the power sector was by buying shares of Meralco. They were able to buy quite a bit of shares, I think 27%. But anyway, after Land Bank agreed to sell it at 90 pesos, they kind of changed their mind, I think. That's why there was a lawsuit. But anyway, so what happened? There was a bidding war between San Miguel and Metro Pacific Group. GSIS ended up selling to the Metro Pacific Group. Then SSS sold the shares in the open market, which Metro Pacific bought. And it bought the shares of the Lopez family. So anyway, there's no place for second best. You know, you can only have one majority owner. So when it was clear that Metro Pacific was the major owner, now San Miguel just decided to sell its 27% stake to the Gokongwei Group. From the perspective of San Miguel, they don't really need to own it. If they actually sell it, the proceeds will help them in their other projects. I don't think they'll dump it in the market, but they'll probably talk to mga funds who may be interested to buy a stake, but not at the current market price, at a discount. Lastly, it wouldn't be an episode in July if we don't talk about e-gaming. Plus jumped 19.5%, rebounding from near 13 peso lows. The bounce was driven by bargain hunting and news that the company is expanding to South Africa, the continent's largest e-gaming market. While regulatory risks remain at home, international growth provides some upside. However, we still have a hold rating on Plus due to massive regulatory uncertainty on its domestic e-gaming operations, which is where it derives its current profits. Despite worries about stricter regulations on e-gaming, TEL gained 3.5% after CEO Manny Pangilinan said Maya remained profitable in the first half of 2025. He downplayed concerns about tighter e-wallet rules, noting that online gaming only accounts for 10 to 20% of Maya's revenues. We have a buy rating on TEL because of its cheap valuation and high dividend yield. However, we don't expect it to be among the best performers in the PSE because of the various threats it faces, including heightened competition in the mobile space. We're barely into the second half of 2025, yet the news cycle is already in full swing. Here are 5 key events this week that could shake the market. The first is the PSEI's rebalancing. The PSE is expected to announce index changes, and with Bloom already expected to be removed, will Plus or RCR replace it and claim its highly coveted spot? Also watch out for AP, as there's speculation that it may be added thanks to proposed tiered public float rules by the SEC. President Marcos is scheduled to deliver his 4th SONA this week. One key area to watch is e-gaming. Some are hoping that the president will announce a ban on e-gaming given the social costs. However, he may just talk about reforms to strengthen regulations on e-gaming, since the government has been earning billions from licensed e-gaming platforms. Another key policy to watch out for is the Konektadong Pinoy Act, which aims to make internet access faster, cheaper, and more widely available, especially in underserved areas. The president could sign the bill into law, positioning it as a bill that levels the playing field, encourages more competition, and supports digital inclusion for all Filipinos. However, he could also veto the bill and call for stronger safeguards, given that, according to cybersecurity groups and tech industry leaders, certain provisions could expose critical infrastructure to data privacy risks. More companies will report 2Q25 results. This will be critical in determining whether the market's rebound has legs. The next is the Fed meeting on July 29 to 30. No rate cuts are expected yet, but the tone of the Fed plus upcoming data like jobs, GDP, and PCE inflation could increase the odds of cuts for September. Lastly, with the August 1 tariff deadline just days away, more trade deals and tweaks could be announced. So far, Philippine exports are in a better position than some ASEAN peers, but risks remain. That's it for this week. We saw a relief rally backed by foreign inflows, a new trade deal, and stock-specific rebounds. But volatility could return fast, especially with the Fed earnings and PSEI rebalancing all happening this week. Thank you for watching. Don't forget to like, subscribe, and hit the notification bell so you're first to know what's moving the market. I'm Aprilitan. A new week is a new opportunity. Remember to stay sharp, stay selective, and as always, invest intelligently.